stock market story has not changed direction since the last update, but it has become more concentrated. Stocks are trying to stabilize while the bond market still sets the terms. For the latest available daily numbers, SPY is at $765.72, up $2.92 or 0.38% on its most recent completed session. Gold, using the GLD ETF as the liquid market proxy, is at $423.36, up $8.18 or 1.97%. Bitcoin is the clearer fresh move. It is around $77,542, up $964 or 1.26% over its latest daily move. That means the cross-asset picture has shifted a little from the weekend. Gold is still holding the strongest defensive bid. SPY has its Friday rebound, but remains below where it started last week. And Bitcoin has recovered some ground after its late week weakness. It is not a broad all-clear signal. It is a market trying to price a persistent tension. Economic activity has held up better than a rate-sensitive equity market would prefer, while long-term Treasury yields remain elevated enough to challenge expensive growth stocks. The yield backdrop is the key reason to keep SPY under a microscope. The 10-year Treasury yield ended last week around 4.74%, and the 30-year around 5.27%. Those are not just abstract macro numbers. Higher long-dated yields raise the discount rate investors apply to future corporate earnings, which puts special pressure on the technology and AI-heavy parts of the S&P 500. That is why a modest SPY bounce does not yet settle the broader question of market breadth or durability. Today is relatively light on top-tier U.S. data, so investors are entering a waiting period rather than receiving a decisive new macro answer. The big test arrives Wednesday morning, August 26, at 8:30 Eastern, when the Bureau of Economic Analysis releases both July personal income and outlays, including the PCE inflation measures, and the second estimate of second quarter GDP. The initial GDP estimate showed the economy growing at a 1.5% annualized rate in the second quarter, after 2.1% in the first. For SPY, the favorable combination would be inflation data soft enough to ease the higher-for-longer rate fear, without a GDP revision weak enough to create a growth scare. A hot PCE number, especially alongside firm consumption, would likely keep upward pressure on long yields and preserve the market's valuation problem. A cooler inflation print could give stocks room to extend Friday's rebound, though investors will still be watching whether the long end of the Treasury market actually confirms that relief. There is also an important company-specific risk in the middle of this macro week: NVIDIA earnings. With the index so dependent on mega-cap technology leadership, its results and guidance could either reinforce the AI earnings narrative or expose how narrow that leadership has become. Then, on Friday, August 28th, Federal Reserve Chair Kevin Warsh's Jackson Hole address becomes the next rates catalyst. So the practical read is straightforward. SPY is stable, gold remains strong, and Bitcoin is bouncing. But the market has not yet passed its yield test. Wednesday's PCE and GDP releases are the next real decision point.